when Larry Fink, right, who's the head of the largest asset manager on the planet, BlackRock, who 6 years ago said this was an index of money laundering. Bitcoin was an index of money laundering. For him to then come on CNBC and say, no, it's a store of value that you should own to protect yourself against the devaluation of the currency. And I just read the stat right before I came on with you. Crazy. So we've added $1 trillion of debt to the national debt in the last 3 months. Now, just again, to put that in perspective, you and I would have to sit here together for 31,710 years and spend $1 every second. That's 1 trillion. So it took 199 years to get the first trillion of debt in this republic, and the last trillion came in 3 months. So what does that mean for the purchasing power of our fiat, the money that we're paid for our work and our service and our lives? Well, it's going down. And I don't have to tell anybody who has gone out to lunch lately or bought a coffee lately or tried to buy a house lately, the value of the money is going down. It's being devalued by the creation of this, what I call the fiat fiasco. And so having a portion of your wealth in this asset that is the antithesis of an inflationary fiat currency, it's a deflationary store of value. It's just a logical, rational thing to do. Here's the thing. There's 30 trillion in boomer accounts managed by financial advisors. It's a lot, 30 trillion. If 10 basis points goes into these ETFs, okay, that's $30 billion on an asset that trades about $10 billion a day. That'll move the price a lot. If 1%, which is not even crazy, 1% should be like the minimum you should put in. I'd argue 2, 3, 5, 8, 10, but 1 is the minimum. That's $300 billion on an asset with a current market cap of around $900 billion. So we're talking about a really, really big growing demand, right? I mean, gold is this amazing asset. It's an asset that is money, right? It's actually one of only 2 or 3 monies in the world. Money is an asset that exists in the absence of a liability. Everything else that we think of as money, dollars, yen, euros, are not money. They're currency. Currency is backed by debt. And money has to exist with no associated liability. And it has to be given value, ascribed value, by use and custom. So yes, we will see central banks adopt Bitcoin. The same way that central banks eventually adopted the renminbi, right? So at first, all the central banks own gold. Gold is the base layer of money, and then they hold other currencies of each other as a store of value, and then they issue currency on top of that. So gold is the base layer. Bitcoin is digital gold. So at some point, the smart ones are going to say, you know what? I'm going to put some in there.